Hey, welcome into Laying Down the Law is presented by the Orlando Law Group. Keep in mind the answers given on this show do not constitute as legal advice and do not create an attorney-client relationship. For legal advice, you can call the great people at the Orlando Law Group's office. That is 407-512-4394. That is 407-512-4394. Or visit them online at theorlandolawgroup.com. That is theorlandolawgroup.com. I'm Nick Grunowitz, and with me, as she is every single week, is Jennifer Englert from the Orlando Law Group. And Jennifer, happy holidays. I know we got a great show set up here with Sonia, and I'm looking forward to talking to her. She's a CPA. We're gonna figure out some money, some tax stuff. It's gonna be a ton of fun.
It is going to be a ton of fun because obviously nobody wants to pay taxes, but saving money is good. So that's what Sonia is going to help us with. We've known each other for a very long time. She is one of my go-to. And as we try to decide what all the things we were going to talk about, we already have a list that's longer than we could ever get to in this show, but at least she could give people a lot of good things to start out with and some good knowledge, especially in this year, which is kind of crazy for everybody.
Absolutely. Well, let's get Sonia on the show here. She is Sonia Narvaez, CPA Accounting and Tax Services. Sonia, before we get started here into all the topics that of course, you and Jennifer want to get into, just tell us a little bit about yourself and what you do.
Sure. Thank you. And Jennifer, again, thanks for the invitation. I am a CPA. I run CPA Accounting and Tax Services. I have been in the Orlando area for about 22 years. And we concentrate on small businesses, individuals. That's all that we can get started with without making it too boring. And I really appreciate that introduction of taxes being exciting. Most people don't think so. But I think in this case, under the new CARES Act that we just got this year, I think things are going to get a little exciting because there's a lot of benefits, at least to make up for this interesting year.
Absolutely. Jennifer, where would you like to start?
Well, Sonia, I know we were talking about unemployment benefits and some of the things that people need to be aware of if they received unemployment, which I really hadn't even thought of. So can you kind of tell the listeners a little bit about things that they should be aware of if they have received unemployment this year?
Yeah, sure. All unemployment benefits are going to be taxable. I talked to a lot of different people, and they're telling me they didn't even think about the 10% withholding, at least at the very minimum, which they should be having. The best thing to do, I know that there's going to be some continued benefits that will go into next year, but every person that's getting benefits should really do some kind of calculation as to what their taxes are, what they were the year before. And I know that can sound a little complicated, but if you're not sure, at the very least, play it a little safe because you don't want to get that tax bill. It feels a little easier when every check, they take 25, 30, whatever, you don't feel it as hard. You don't feel it in your pocket as hard than when you get that $500 or $1,500 bill at the end of the year. So I really want to say, take a look at your numbers, get a little bit of that unemployment, and have the unemployment. You can log in online and you can have them withhold 10% or anything that you can afford, that you can manage as you go along and you get those benefits.
If somebody didn't do that, because I have a feeling that probably the majority of people did not, were they supposed to have been kind of doing it every quarter, or what are you supposed to be doing, especially if you forgot to tell them to withhold it?
Well, it's a bit too late at this point. They've received the benefit. So when we do the calculation of the tax return itself, that's when we're going to see what exactly, where the income is and where the tax will be, what is owed in tax. So the best way to do it normally is just to log in online and then they take it out every week. So that's why I was saying if they do a little bit every week, if they do 10%, you're getting $300, $30. You're not going to feel it as much than if you do that at the end of the year when you finally get that tax. Some people made a certain amount of money and then now they received at the beginning of this whole thing $800 a week, and then it's got extended and not withholding any taxes. They could see some uncomfortable numbers at the time of tax return.
Okay, and for people who just heard this and said, never mind, I'm just not going to file my taxes this year because I don't have the money to pay it now and I did not withhold it. I know that's not a good idea, but what is your advice to those people who think that they just, like, what's the best thing to do if you did not do any withholding the whole year and now you might not have the money to pay the IRS if you owe something?
Please file the tax return. There are penalties for not filing, lack of filing, and those are high. There's always an installment agreement under the circumstances. I don't know exactly if they're going to waive some interest, but at this point, I definitely do file the return. And remember that they're using prior year returns to give benefits, to give the $600, $1,200 that people get. So it is important to file to stay on record. An installment plan can be made, can be requested, and I don't see why they would turn it down. And a lot of times under $25,000 is automatic. So just request an installment plan, get on that, and as things get better, you can get it paid off. I do say pay as fast as possible. Their interest rate is not necessarily the lowest.
Okay, but that's a good point too. You won't be able to get, if there is another stimulus check or whatever, and you're not at least filed, you're definitely not going to be eligible for it. Because we had a lot of clients that did not receive or have issues with child support and did not receive that we could have cleared up ahead of time.
Right. Yeah, I'm sorry. Go ahead.
No, I mean, yeah, any other thoughts for some, because I know even though we're telling people to do this, they're still not going to file the return. If you don't file a return or you are in the situation where you owe taxes and you don't know what to do, we get a lot of calls about that too. I know you don't always have to get a lawyer to help you with that, and I try to steer people away from that. Do you have any expertise in, like, as an accountant, helping people kind of work with the IRS?
Absolutely. I represent them all the time with different issues, different problems. We work things out, we negotiate debt. This is very important, especially the individuals that have businesses that really need help with whatever they have run into and they were not able to address because of records. So yes, we can help people like that. But I do say file that return because it's going to be very important for any stimulus payments or anything that comes through. And they will give you an installment plan, unless of course you're over $25,000, then it becomes a total different situation that would have to be addressed as it happens.
Okay, those are really good tips. Now, I know part of the reason why people have not gotten stimulus checks or if they owe child support or there's a child support issue. A lot of times, too, people don't file returns because they owe child support. So, I mean, I've seen it go all the different ways with taxes. If they think that their refund's going to go to the other parent, they won't file. So there's all kinds of things we deal with in that way. But and I know with the changes in the tax law, that also made it a little bit more confusing. But can we talk a little bit about individuals and claiming their children and some good practices for 2020? Again, 2020 is kind of already done now, but things that they could maybe do in 2021 if it's a little bit muddy, or things they could do on their return for 2020 about claiming their kids.
Okay, sure. And just to clear it up, this is for divorced parents that already have a divorce settlement agreement, or I'm just trying to clear out the question there.
Sure. Well, we have both. I mean, we still now, because it used to be really easy to decide how to claim kids, but with the changes in the tax law and the raising of the standard deduction, there's a whole lot of issues there. So anything, I mean, actually any tips you want for people going through a divorce or who have already divorced, whatever you think are kind of the most important things for people to know, because there's a ton of questions on all of that. Why don't you start with people who have already divorced?
Okay. For people who are already divorced, normally even the divorce decree, the IRS does not have to be bound by the divorce decree. So even if it's signed by the two individuals. However, if they, like for example, if there's a couple who the mother is supposed to have the claiming of the children and the divorce decree says so, then basically they both have to follow that court order. But let's say the father claims the children. It's not, the IRS will allow it as long as, and the most important factor here is to remember that there's physical custody. So if the father can somehow prove that the child or children lived with him more or stayed overnight more time than they did with the mother, even though it is on the divorce decree, the IRS will give the deduction to the father. Now, granted, the mother may get into trouble with a court order, and that would be between them two. But the IRS will still give the deduction to the father who has that overnight presence, the more number of nights. And for future, if there's a problem, the best thing to do is to keep record of where the children are, the nights. It sounds crazy, but it will make a difference. And keeping receipts, bills, where they're at, logs, very important in case something happens with that deduction. I actually had a divorced couple this year who they had two children, and the mother has custody. And the deduction every year, they're mainly with her, but the husband, with all this pandemic, run into some financial crisis. And you do get nice credits when you have children, and you have different credits under the circumstances right now with the income. Most income, lower income gets the nicer credits. So he claimed the children, and what we recommended for the lady to do was send it in writing, send the information and some kind of proof that they spend the time with you. So there's no questions. They give you your money back, and they basically will send him a letter, and they will request for that money back with interest.
You're listening to Laying Down the Law, presented by the Orlando Law Group. The answers given on this show do not constitute as legal advice and do not create an attorney-client relationship. For legal advice, you can call the Orlando Law Group's office at 407-512-4394. That's 407-512-4394. More with our guest, Sonia Narvaez, President and CEO at CPA and Accounting Tax Services, over 20 years right here in Orlando. Coming up after the three big things you need to know right here on WDBO.